Masterminds, what's going on? This is Diamond Life. So I'm doing a before and after review of my shadow trading system. Okay. So I had some people say if it works so well, then you should be able to predict price with it. I'm like, these fucking people have no idea who. First off, who the hell they talking to. But you just got to show people. So uh, so this is before price action has happened. Okay, it's Sunday right now, and the market be opening up in about 6 hours. So let me explain why I believe price is going higher and why I'm going to take a long when the market opens. Okay. So first off, we have I have two Fibonacci's right here. This is how I do Fibonacci. This is ICT. This is the way he have the Fibonacci settings. Okay. I still have the regular Fibonacci settings on here, but I just didn't want to include them like the 23.6, the 38.2, 61.8. I do use these. This is ITCs right here, 70.5. I just didn't add them on here. So listen, this is what I did. This is how I do the Fibonacci on a 5-minute chart. I'm actually testing this to see if this is some kind of hack or something. Okay, I've been looking for a hack with the Fibonacci for a while, meaning a Fibonacci cluster, meaning if you draw multiple Fibonacci's, it could predict where price will stop at. So here's the Fibonacci on the wicks right here. So this wick down here and this wick up here. Okay, so I have Fibonacci on this wick down here and this wick up here. Okay. And so that's why I have it white. I have this Fibonacci here because it's on a 1-hour chart. My 1-hour chart color is gold. Okay. And this is the bodies. These dashed lines means the bodies. This is just my own philosophy how I do this. So I have a Fibonacci on a 1-hour chart, which is pretty solid on the bodies. I didn't put it on the wicks. And then I have the wick Fibonacci. Okay. So what happens is we have a cluster. So what happens is I'm kind of teaching on Fibonacci now, but I'm still going to predict what price is going, but let me just teach this real quick. So we have a cluster right here. We have a -27 and we have a -5. So price could stop right here. Okay, in this area right here, it could stop between -27 and negative 0.5 right here. Also, this lines up with something I call gem trading, which is glitch in a matrix trading, which I'm not going to speak on. That's what these purple lines are. Okay, so based on the glitch in a matrix, which is similar to shadow trading, but it's probably about 10 times more powerful or maybe 5 times more powerful. It's showing me that price has to come up here anyway. See, price has to come up here anyway because it has to catch up, okay, to something. And it's not S&P 500, it's not NAS 100. That's shadow trading. This is something more, 5 times, 10 times more powerful that I really can't speak on, okay? So price has to come up here based on my glitch in the matrix system, okay? But also, when I look at the shadow trading, look at this. We have ES, which is a futures contract for S&P 500. The ES already came all the way up here to this yellow line right here, which is the 4th standard deviation. Is this number 4? Yeah. I'm trying to zoom in because I know when I'm recording, it looks a little strange. So I'm trying to zoom in as much as possible, okay? All right, so we have a futures contract, which is ES, and then we have a futures contract for Dow Jones Industrial, which went a lot higher too. So I have confirmation that price is going higher, okay? And I'm going to tell you where I'm going to get out at, okay? Because even though I have confirmation that price is coming all the way up here, I'm not going to wait for price to come all the way up here because we can have a huge retracement beforehand. But let me explain the Fibonacci cluster. So right here, okay? So we have a cluster. We have a -0.5 on the body Fibonacci, and then I have the wick Fibonacci, and then I have the body Fibonacci, okay? And so let me highlight this so you can see what I'm talking about. So this is called a Fibonacci cluster. So if you don't understand the structure yet, you can actually draw multiple Fibonacci's, and where you see the lines coming close to each other on 2 different Fibonacci's, that's where price is going to stop at, most likely, like right here. Okay, you see this -70.5? You see that? And you see this is perfect right here. You see that this is way too close. Price is definitely going to stop up here. And I'll leave this line right here when I do the after video, and we'll see. So this is a -70.5 and a -0.5. I'm trying to tell you that this is going to be a strong area where price is going to reverse at. I'm not going to hold for price to come up here, but I'll tell you where I'm going to hold at for price to come to. I'm probably going to hold till where price comes up here, or probably this line right here, and I'll explain why. So let me keep going to the left. As I keep going to the left, we have a NAS 100 futures contract. This is what NQ means. You probably can't really see it, but this is called NQ. This is a NAS 100 futures contract. Okay. So on the futures contract, price went higher as well. So I have confirmation that price is going to hit this yellow line. It's going to hit this green line. So S&P 500, this is a futures contract. This is ES. Okay. And this is NAS 100. This is a futures contract. So I have confirmation that, remember, all these move similar. This is US 30, but US 30, the futures contract for US 30 is YM. Okay. The futures contract for NAS 100 is NQ. I know this is confusing to people who knew, but just keep watching the shit, man. You're going to get it. You can't watch it one time and think you're going to get it, man. Hopefully you really heard what I just said. So what I'm saying is that I have confirmation that it's definitely going higher. So let me go back to where price is now. It's not going to be a long video. Now, remember this area here, because I'm telling you, this is going to be a strong area where price is going to reverse. Why? Because we have two Fibonacci's. We have the wick Fibonacci and we have the body Fibonacci on a 1 hour chart. These lines are very close to each other, so that's a Fibonacci cluster. So you actually can use this if you don't understand the structure yet. But when I do the after video, I'm going to talk all kinds of shit when price come up here in reverse, because I'm trying to tell you how to do this shit. But, you know, don't believe me, believe what you see, right? Because remember, I don't know what price is actually going to do because the market hasn't opened yet, but I'm predicting price, all right? Because my teacher, ICT, he's told me, he teaches us to predict price. A lot of other traders, they say react to price. We don't react to shit. We're predicting price. ICT said we're absolutely predicting price. So these people out here saying you can't predict price and you have to react to it, these are people who really don't know what the fuck is going on, in my opinion. And in my teacher ICT's opinion. But don't believe me, believe what you see, right? The market isn't even open right now. We'll see if price goes to my target or not. So let me draw this line out here. It's not going to be a long video at all. So let me go back to the Fibonacci cluster to make sure I have this yellow line exactly on the Fibonacci cluster. Remember, it's the wick. I have it on the wick Fibonacci. And then I have it on the body of the 1 hour Fibonacci chart right now. Oh shit, hold on quick. Let me press back because I moved the line accidentally. I'm just going back to where that Fibonacci cluster was so I can move this yellow line exactly to where it was at. All right, so this is the before video. This is going to be an interesting area. This is the wick Fibonacci and the 1 hour body Fibonacci. We have a cluster right here, okay, on the standard deviations, which is even more powerful. We got a 0.75 and a negative 0.75, okay? So let me go to where price is now and predict price, and then I'll end the video. It's not going to be a long video at all. All right. So I just showed you why I believe price is going higher. I have confirmation that it's going higher based on pairs, based on 3 other indices that move similar, and I have even more confirmation, which is the futures contract. Okay, the future contract literally moves exactly like the spot pair US 30 NAS 100, but they move similar, but the candle price action is actually different, even though they still move similar, especially when you trade in New York Open. Okay, so what do we have here? What do I see happening? Okay, so we just took out a high right here. Okay, so price is not just going to keep going up. It's not going to go in a straight line. Okay, price is going to retrace. It's going to retrace and then go lower, higher. That's what I see happening. Okay, so so we just took out a high right here. So it seemed like the next target is down here. So price may come down here and take out these equal lows and then go higher. Okay. Bullish order block. Okay, this is a bullish order block, 4 hour and 2 hour opening price. I need to go find the mean threshold that I didn't mark up. I need to go find the mean threshold of the 4 hour order block because I didn't mark it up. This is the bullish order block, 2 hour and 4 hour opening price. This is how I mark up the order blocks. Okay, like sometimes you see them match up, so you need to put bullish order block 4 hour and 2 hour, and I'll put LDCC. You don't have to do it like this, but I think it's smart to do it like this because you can have multiple order blocks on your chart And if you don't mark up like the lowest, this means lowest down closed candle. That's what LDCC means. And OP means opening price. So, I mean, somebody really going to see how I really mark this shit up one day and be like, damn, that's a smart way to do it. But anyway, so let me go down to the 4-hour chart and mark up the mean threshold, because the mean threshold is going to tell me a lot about what this price action is doing down here. Okay, I didn't mark it up. I just marked up the bullish order block opening price. Okay, so now let me go to the 4-hour chart and let's mark up the mean threshold. Okay, so now we're going to find mean threshold, and then I have to mark that up, and then I'll end the video. I'll show you where I see price going, and then I'm going to end the video. It's going to be a conservative move that I'm going to do. It's going to be a conservative move. It's not going to be so see right here, this is teaching on order blocks as well. So right here I have to mark up the mean threshold, which is 50% of this last down closed candle. This is an order block. Okay, it's a last down closed candle, and it created a fair value gap right here as well. It created a gap as well. Okay, so let me go ahead and mark up mean threshold. So this is how I do it. Make sure I zoom in, because I know when I'm recording it looks kind of weird. Make sure I'm zooming all the way in. All right, so let me mark this up. So I use the Fibonacci. I put it on the body here. So we're trying to find 50% of this body right here. Okay, this is ICT order block theory. We find the last down closed candle. This order block is not the last down closed candle, because I know advanced people are going to be watching this like, he don't know what he's talking about. Look, motherfucker, I know exactly what I'm talking about. I'm trying to explain to people that's new, but trying to give them a little bit of what order block is without confusing them. It's not just the last down closed candle. It's way deeper than that. I've done the research. I've done the back testing. Okay, I'm just saying, for somebody like a real one gonna watch this in the future, and I just want him or her to know it's deeper than the last down closed candle. Because the lazy ass people, they're the ones that think every order block is a last down closed candle. It's a lot deeper than that. But you have to be a person that gives a damn to actually do the study. Okay, so I'm putting this on exactly on the body. As you can see, I'm zooming all the way in. This is just how I do it. I'm not saying you have to do it. You can use the little magnet thing or whatever. You can come down here and use the magnet, and it's supposedly supposed to put it exactly on open, high, low, and close. And I'm not saying it don't do that, but this is just the way I do it. I like to get in. I like to zoom all the way in perfectly, because it'll put it exactly on the number, the open, high, close number. But sometimes I'll see a gap when I zoom in. So let me actually put this exactly on the body low down here, and then we'll find. This is how you find mean threshold of a bullish order block. Okay. So what I'm trying to tell people is that if you use the magnet, or if you lazy as hell and don't want to zoom in, sometimes you'll have a gap like this. It don't seem like it's a difference, but look at the numbers over here. See the numbers? It says 0.79, 0.85, 0.9. See, all this matters. That's why you have to be very precise. And that's what I got from Q Banks. That's the only thing I really got from having his course back in the day. I thought, ICT's teachings was obviously a lot better. But one thing Q Banks talked about was that you have to be precise, because this stuff is not random at all. The ignorant people who call this gambling, which I find very offensive, because I think poker is gambling and blackjack is gambling. But now I'm starting to see that that's actually really not gambling in a way. I don't understand how it's not gambling, but it's some kind of science to it. But this right here is not gambling at all. You can gamble by just randomly doing shit, So let me go ahead and mark up mean threshold. So this is 50%. So I'm going to draw this line out right here. And I'm going to label the line as well. Okay. So let me double click back on this line and label it. Every line that you put on the chart, I feel like you need to label it, because you got so much going on in your own personal life. When you come back to these charts, I'm telling you, you're not going to know what these lines mean. You're going to be like, what the hell does that mean? You have to you have to label everything, man. So I'm going to put plus OB. Okay. So I'm going to put plus OB, which is bullish order block. And then I'm going to put 4HMT, which means mean threshold. Okay. Now, the way I do is I color coordinate it. I use green for the 4-hour chart, but I don't want to have two green lines. So I'm going to use white, because I don't want to see two green. I don't want to see a green line and a green text. So I use white for, the mean threshold. So this is mean threshold. The lazy people, they're just going to eyeball it. People like myself, we're going to zoom in and we're going to make sure it's exactly on the 50%. Okay. See the gap right there? This means something. Like, okay, you know, do it however you want to do it, but this means something. So you have to zoom all the way in and make sure it's exactly on that line, in my opinion. So now what I'm about to do is delete this Fibonacci to help me find mean threshold, and then we're going to go back down to the 5-minute chart. So ICT, the way he teach it, or the way he taught it, was that you want to go down to a time frame that you master. So when I first started watching his videos, he was always on a 15-minute chart. And then like the last year and a half before he started releasing all his free stuff, he was always on the 5-minute chart. So I was like, okay, well, maybe I need to go to the 5-minute chart and start mastering, because you need to train your eyes to see the structure on a lower time frame or whatever time frame you want to enter on. So I like entering on a 5-minute chart because I can see bullish breakers and everything a lot more clearly. And recently ICT has been on a 1-minute chart lately. So, that says a lot. But let me go back to the mean threshold, because I had to mark that up to really see where I'm going to enter and what's really going on. Okay, so where is it? Oh, Lord. What happened to the mean threshold line? I just marked it up. Fuck. Okay, here it is right here. Okay, so now what I need to do is I need to draw this line out, and it's going to tell me everything. Okay, it's going to tell me everything. Now I'm about to zoom into the price action. You have to mark up the mean threshold and the bullish order block. Okay. Okay, so this is interesting right here. I really like seeing the mean threshold on the daily chart, but this right here, see, look, this is mean threshold. So since a candle closed below it, if you understand how this shit works, price has to come back down. That's why it's important for you to master it on a certain time frame. Because if I would have seen this, even if price went higher, I would have known that it would have had to. It's going to come back down lower because price closed below, a candle closed below on a 5-minute chart, below mean threshold. I really like to see this on a daily chart. Okay, so where's the high at? Hold on. So price is definitely going higher. It did take out this high right here, which confirms that it's going higher. But also when price came back down to mean threshold, as you can see, price did not close below mean threshold. See that? And we have a micro SpaceX candle, which is something I created. And so what I see happening is, price could come down here and take out these lows. It could wick down here and not close below mean threshold, because it would be going lower. It could come back down here and then wick and take out these lows and then go higher. Okay, so what I'm going to do at the open is I'm going to let me just draw this and then I'll end the video. So what I'm going to do is I'm actually going to get in on the open. Let's say if I'm using 0.5 leverage for my whole system, okay? This is how I'm going to do it. All right, so let's say I'm using a whole lot. Let's say I'm using one lot. So what I'm going to do is, this is position management. So I'm going to get in on a 0.25 right at the open, okay? And I'm going to show you where my stop loss is going to be at as well, because people keep saying like, well, where's your stop loss going to be? So that kind of makes sense, to explain this with the stop loss. So look, I'm going to get in on the open right here on a 0.25. My whole position is going to be a lot, which is one lot, which makes up four 0.25s. Okay. So what I'm going to do is I'm going to down here, I'm going to put in on a 50 right here, because I think if price comes down, if it comes down here, I think it may do something like this. It's going to wick down here and then take off. So it could do that. It could come, but I don't want to see it close below mean threshold, or we got a problem. I have to reanalyze. Okay. So if that's true, right? If I know that's true, then I'm going to put on more leverage down here. Okay. So I'm going to put on a 50 down here. So now I have 0.75 leverage on. See that? So now I have 25% left if I'm using a lot. Now, price also could not do what I just said and just come down here to the bullish order block. This is a bullish order block on the 5-minute chart. Okay. What do I mean? So right here, What I'm saying is price could come down here to this. This is a bullish breaker. This is a bullish breaker as well. So it could come down here to this highest up close candle and not wick below these lows and then go higher. Okay. So since I got 25% left in the tank and I'm using a whole lot, then what I'm going to do is I'm going to put a buy stop. I'm going to put a buy stop above this line here, because price could come up here, take out this high, and then come down here and do this and then go higher. See, the problem with this game is not the problem, but I guess the puzzle, or to me, it's exciting to use your mind to figure this shit out. But price could come up here to take out these highs and then come down here to this breaker, or take out these lows, then go higher up to where I'm about to tell you where I think it's going to. So what I'm going to do is I'm going to put a buy stop. I'm just going to put a buy stop above this high right here. And so I'm going to put a buy stop right here for 25% as well. So this is going to be a whole lot. And I'm going to leave these lines on here. So now I'm in the deal for a whole lot. You see what I'm saying? Instead of putting on a fucking lot right here like an idiot and then being in drawdown, like, you have to spread your risk, man. So where's my stop loss going to be at? I'll tell you where it's going to be at. It's going to be exactly where ICT showed me where it should be at. Okay. Where's mean threshold? So the stop loss, if price is truly bullish, then it shouldn't go below a bullish order block. So let's go back to the 4-hour chart. Then I have to show you. Actually, let me show you where it's going, and then I'll show you where stop loss is. Okay, so where am I getting out at? Now remember, I have these shadows over here that's showing me that price is going higher, right? So where I'm getting out at is, this is probably going to be my target right here. This line right here. This is 50% of a standard deviation. Okay, I actually have confirmation that price has to come here, to be honest with you, based on my glitch in the matrix system. That's what these these purple lines are. This is a glitch in the matrix confirmations. Okay, so basically, based on a glitch in the matrix, price came up to this line here, and then price failed right here. So a lot of times when it comes up to these lines and it fails, it's going to come up with a vengeance. So I could hold for price to come up here because I got confirmation, but I'm probably going to get out at this line here. But I'm probably going to get out at a quarter point before this line. This is a scalp right here, what I'm doing. Okay, because I do have confirmation that price can go a lot higher, but it may retrace down. Like what I'm saying is price could peak up here and then retrace all the way down to retest this high before it goes higher. I don't want to sit through all that. See, this is a psychology game. You know it's going to go a lot higher, but a lot of people don't want to see the money in their account go all the way down, even though they know it's going higher. People just don't want to hold. People always think that they might be wrong, even though we know we're right. It's just a psychology game. So I'm probably going to hold for this line right here, but I'm going to get out at a QP, which is a quarter point before this line. Okay. And then I'll show you what my stop loss would be. I'm going to end the video. So quarter points is where the orders are. Okay. So the orders are at the 500s, the 250s, the 750s, and the 00, which is big figure. Okay. So if you look at the numbers over here, you should be looking to the left. So here's a quarter point right here. The quarter point here's a quarter point right here at 500. I actually could get out here because price could come here and reverse. Okay. So what I probably do is I probably take something off here. I'll probably take off 50% of my position here, meaning that I'll only have a lot left. I'll have 0.50 left, because if I'm activated, if price comes down here, and if it does what I'm thinking, if it comes down here and take out these lows before it goes higher, then I'll be activated at a lot. I'll be in for a whole lot. And then I can get out at this quarter point, which if you see 37.5, the orders are at the 500s, the 750s, the 250s, and the 00s, which is big figures. Okay. Also, you have something called micro quarter points, which is the 20s, 50s, and the 80s. I mean, this is like ICT type shit from people who really watch his videos. Okay. Let me see something. I gotta go. Hold on. I gotta look back at the quarter points. Okay. This is a 3.5. Okay. Yeah. See, I have confirmation from ES, from NQ, from YM that price is coming up to this turquoise line. But you know what? I'm just gonna go ahead and be conservative. I'm gonna go ahead and get out at that 500. I don't want to do this, but okay. So here's the quarter point right here. Okay, so here's a quarter point. But what I'm going to do is I'm going to get out at a micro quarter point before that, because sometimes I see that the price reverses off of these quarter points, but it reverses. Sometimes it reverses before it get to it. Okay, like I said, I have confirmation that prices come. I'm taking off 50% here, and then I'll take off the rest at this line here. I really want to hold for this line, but I'm just going to get out at this line. Okay, so let me show you where my take profits will be, and then I'll show you where the stop loss will be, and then I'll end the video. So this is a quarter point right here. Okay, this is 500 quarter point. Okay, see where it says 37,500. The orders are at the big orders are at the 500s, the 750s, the 250s, and the 00s, meaning that the orders are at, this is 37,500. The big orders are at 40,000. Okay, the next big order is going to be at 750. You don't have to believe me. Back test it and see. I've done a crazy person amount of back tests. It's definitely true, especially on US 30. It's definitely true. Crazy true on US 30. All right, so let me put 500 QP. All right, so okay, so what do I mean by micro quarter point? The micro quarter point is the 20, the 50s, and the 80s that's before this. So if I scroll down, the micro quarter point is going to be at 37,480. Does that make sense? See that? That's 37,480. So this is a micro quarter point, meaning that price sometimes will reverse when it gets to before the QP. Okay, so this is extremely conservative. I mean, price gonna go a lot higher than this. I don't know why I'm not just holding, but like I said, it's a psychology game. So I'm gonna label this micro QP, and I'm gonna get out at 25% here, and then I'm gonna take off everything at this level here. So let me label this micro QP. So this is a micro QP, which is the 0.80. I mean, you really learn this kind of shit when you turn off YouTube and Netflix and turn on fucking ICT. So, okay, so this is a micro quarter point. So this is extremely conservative. I'm going to get out here. I'm going to take off 50% of the position here. And then I'm going to take off the rest of the, I really want to hold for this line right here, but I'm going to get out at a micro quarter point before this line. So let's look to the left. We got 37. Let's see. Actually, this is a, yeah, I'm gonna get out a micro quarter point before this. So this is the 50s, the 20s, and the 80s. So I'm gonna get out at 37,520. Yeah, I don't know why. This is extremely conservative. Okay, you see where it says 37,520? I don't know why. Nah. Okay, so I'm gonna take off 50% here. I'm gonna take off 25% here, and then another 25% at this line right here. I'm gonna hold for this line. Now I'm gonna get out here. I'm gonna take off everything at this line, okay? Because if you look to the left, we got 37,548. So the actual order is at 37,550. So I believe price will hit this line. It's gonna hit this purple line, but it might fail. I've seen a lot of times that it'll fail to hit it, like right here. You see, like we had confirmation that price was going to hit this green line on my glitch in the matrix system, but when price came up here, it failed to hit it, and then it retraced hard. You see that? That's what I don't want to happen. I want to get out right before it retraces hard. It has to come up to this green line. You see that? You see how it failed? So we always get out before price hits our target, which is what ICT teaches. Okay, this is the main reason why I'm doing it like this. So I'm going to take off 50% here, 25% here, and I'll take off the rest of my order here. And I'm going to leave a runner on. So I'll probably put in another position as well. So I'll probably put on a lot, 1.25. So a lot and then 25%. And I'll probably leave a runner on because I see price going higher. So I'm going to leave that runner on. Okay. So let me go ahead and go to the 4-hour chart, and I'll put on the stop loss and then end the video. Show you what a stop loss is going to be at. Okay. So let me go down to so the way ICT teaches is that we put the stop loss below the bullish order block, okay? Because if it's truly bullish, it should not take out the low, all right? So let me show you what a stop loss is going to be. Okay, so we have a bullish order block here. So the stop loss is going to be it's it's kind of a big, well, not really, because yeah. So I'm going to put the stop loss below this wick here. Okay. I'm going to put the stop loss below consequent encroachment because price really shouldn't be coming down here. To be honest with you. So what I mean by that, consequent encroachment is 50% of this wick. Okay, because the market looks at wicks as gaps, which is some shit ICT came up with, which a lot of people don't even talk about. This shit is so true. I've back tested like crazy. It treats these long wicks just like gaps, just like inefficiencies. So I'm putting my stop loss here. Well, actually, what I'm going to do is put an alert here, but my actual real stop loss is going to be here. Actually, I'm going to put an alert here. If price get down here, I'm gonna be like, what the fuck, what the fuck is really going on? So I'll probably put an alert here, and then I'll probably put the stop loss here at consequent encroachment, even though I want to put it at this low at this wick, but it would be in too much drawdown already. Okay. So let me just go ahead and put the stop loss at 25%. This is what the stop loss would be, and then I'll end the video. Hopefully I zoomed in enough where people can see. Try to zoom in where people can see the, so this is going to be the stop loss. Okay, so I'm going to put an alert. Actually, no, I'm going to put an alert before that because, okay, so here's mean threshold, right? So what I'm going to do is I'm actually going to put an alert. I actually have an alert right here. So back below the 50%. It seemed like I was looking for this right here based on this alert. So what I'm going to do is put an alert like right here. And to be honest with you, if price closes below, actually, I don't even have to put an alert. If price closes below this mean threshold on the 5-minute chart, if it closes below it, I'm going to sell everything because what's going to happen is price is going to reverse up temporarily and then it's going to go lower. That's why you have to find the mean threshold. I really like to see it on the daily chart, but I know price action is fractal, and I just showed you. So I'm actually going to I'm not going to use a stop loss because I'm going to use price action for the stop loss, if that makes sense. If it closes, I'm going to put an alert for. Actually, I'm going to put the alert here at mean threshold. Okay. So what I'm saying is if price comes down here, I'm not going to do anything. But if it closes below the mean threshold on the 5-minute chart, then what's going to happen is it's going to close below, then it's going to retrace up temporarily, and then it's going to go lower. So that means I'm wrong, which is okay. And so you have to understand how the structure works because a lot of people, they don't understand how the structure works, and they sell, they see price going down. They're like, oh shit, I'm in drawdown. And then they close their orders and then price reverses and they could have made a profit or broke even. So you can break even or make a small profit before it goes lower by understanding the structure. So I'm not going to put a stop loss. I'm going to put an alert right here. And if price closes below mean threshold on the 5-minute chart, I'm going to get out when it retraces up. I'm going to either make a profit or break even, and then it's going to go lower, and then I'm going to be wrong, and then I'm going to have to figure out, what I'm going to do after that. So you still can win even if you're wrong by understanding the structure, if that makes sense. So I just explained that. So this is a before video. We'll do an after video, maybe Tuesday, when price is kind of moving to see if I was right or wrong. Okay. Thanks for watching.